What's up, guys? Welcome back to my channel. Today we're going to cover exactly step by step how I am growing a small account in 2024. So I deposited $3,000 into my broker on Wednesday the 6th, and since then I have been able to grow that to over $11,000 as of a week later. So $8,000 in profit. I want to break this down for you guys so you have no questions on what I'm doing, how I'm doing it, and where you can get started if you are looking to grow a small account this year. Okay, so step number one is, what will you trade? So the first step in starting a small account is deciding what you want to trade that will give you the best ROI for your small account. This is actually a bigger decision than most people realize, and you can absolutely be wasting your time if you choose something that's super difficult to grow a small account when it comes to trading. So let me give you some examples here. Just things that I have personally traded over the years, and I have done a small account challenge with every single one of these. That is stocks, options, and futures. So before you choose, you need to first understand the PDT rule and cash accounts. I'm sure many of you are very familiar with this rule, so just bear with me for a second. I just need to refresh people who might be new. So basically, to summarize, the PDT rule states that if you make 4 or more day trades within 5 business days, you need to have an account with $25,000 or over, and that's if you're using margin. So a lot of people say, well, that doesn't apply if I'm using a cash account, which you are correct. So there are pros and cons if you are using a cash account, and I have used cash accounts in the past to grow a small account. If you've looked at my previous YouTube videos, you know that last year I did a lot of small account content in regards to options trading. And so if you do decide to go that route, just make sure you're using a cash account, because you can then day trade with your settled funds, not unsettled. So for example, if you had a $1,000 account and you took, let's say, 2 options trades that took up $500, you then have the rest of that $500 to day trade with, and it settles in 24 hours. Now, if you're trading stocks and you're trying to day trade stocks on a cash account, you have to wait 48 hours for that to settle. So it puts more of a pause on your day trading capabilities if you are trying to use a cash account with stocks. So overall, I will say, yes, a cash account is a way around the PDT rule. However, you're still limited to only day trading with the funds that are settled. And then if you're using options, you have to wait 24 hours for those funds to settle, which isn't always a bad thing. You can definitely grow a small account doing so. But that brings me to what I am personally day trading this year, and that is futures trading. So one of the big benefits of futures trading is there is no PDT rule in place. So that means you don't have to worry about your cash settling. You don't have to worry about $25,000. You can start with a small amount of money and have unlimited day trade capabilities. However, commissions can be high, so I will warn you there. So me personally, this year in 2024, and how I did this small account challenge this year is using futures trading. Now, this is a little article on Ninja that you can come in here and read, and they kind of explain further how it works. But I just want to highlight that they say it right here that you can start with only $400 and open an account. And then you are obviously going to be limited if you start with only $400 with what you're able to trade. The less amount of money you have, the more difficult that challenge is always going to be. I hope you guys know that. There is a sweet spot that I have personally found with futures trading, and if I'm using a self-funded account, which we'll go over in just a second, I personally like $2,000 to $3,000 to start a small account challenge, but you can absolutely do that with something in regards to like a $500 to $1,000 account. But there are cheaper options. So if both of those are out of your budget, just hold on a minute and we'll cover something that you can start with as little as $50. So obviously that brings us into the next step number 2, which is what is going to be your starting amount. So how much money can you comfortably start with? This amount should not stress you out, aka be bill money. I hate that I have to say this, but I personally did this in the beginning, and I just want to remind you guys, any amount of money that you are trading with that you are stressed out about, meaning it needs to go for your grocery bills or your electric bill or your house payment, gas money, I don't know what it is, but if those bills are not being paid and you're using that money to trade with, it won't ever work. You are going to be too stressed out. You're going to care too much about that money. You'll be too emotionally involved to not be able to trade properly. So make sure that whatever amount you are starting with is something that you're okay with losing. Obviously, that's not the goal. You don't want to blow your account. However, it is very common, especially with people who are not going to follow these rules that we're going over in today's small account challenge. So realistic starting capital would look like these 3 different options, right? So self-funded is what I'm personally doing, and I'll go over kind of reasons why. I've done both, so prop firms and self-funded. I have content on both on my channel, on my Instagram, and I teach both of these. So they are both very valid options to get started with futures trading, and there are pros and cons to each of these. Now, self-funded funded, you can start with as little as $500 to $1,000. If you start with 500, you're going to need to be trading the smaller contracts, and those are micros. If you are confused on terminology or kind of what I'm talking about, I do have a free futures workshop. So after this, there's only so much content I can cram into the small account challenge in regards to futures trading. This is not a how-to futures trading video, even though I also have those on my channel. But if you're interested in more info on futures trading, prop firms, what brokers I use, all of that information, make sure to check out that free futures workshop linked in the description box down below after this video. Self-funded, there are cheaper options, but for me, I chose $3,000 because that seems to be my sweet spot. Prop firms, you can start with as little as $50, but there are activation fees. So in the end, it could be closer to $150 to $200. And then obviously you've got paper trading, which can cost you as little as $0. But then if you want data, then you've got to pay for that. And that can be around $12. Okay, step number 3, we're running through this as usual. I don't want to waste y'all's time. So once you have a starting amount, you've decided what you want to trade. Next is the most intensive part, and that is step number 3. Before you actually place a trade, you have to develop a trading plan. So that means if you start trading without a plan, I don't care if you have a small account, large account, especially if you have a large account, you can just expect to lose it all. I automatically want you to have that in your head. If you are skipping all these steps, you're not developing a trading plan or a trading strategy, and you start a small account challenge, just expect to quickly lose it and blow it probably fairly quickly. Yeah, you might get lucky a time or two, but eventually it'll catch up to you and you will blow that entire account. I am not above this. When I first started, I didn't do any of this. That's why I make these videos for you guys, because I didn't have a trading plan. I didn't have an edge or a trading strategy. I didn't know what risk versus reward was, and I blew a ton of accounts, which really takes a toll on you. It makes it way harder. So unless you're super hard-headed like me, you'll eventually give up. So this is why I'm making these videos, to make sure that you guys can actually succeed in the long term. Okay, so a trading plan, obviously you need to set some rules for yourself. So rule number 1 can look like what time frames to trade. And this just doesn't mean, are you trading a 5-minute to a 15-minute to a 1 hour? This also means what time of the day are you actually setting aside to trade. I'm a big fan of creating time block windows, and you're only trading during those windows, and then you are off the screens the rest of the time. If you are day trading all day, it's usually a recipe for disaster. Unless you just have the mental capacity to take hundreds of trades, you'll most likely give back a ton of your profits via overtrading. Rule number 2, position sizing and risk. This is understanding, okay, based on your account, how many contracts can you trade? If you are trading options or futures, that's relevant. If you're trading stocks, then obviously that's a different conversation. And then your risk model. So are you trading a 2-to-1, 3-to-1, 1-to-1? What does that look like? And you need to know this because obviously if you're trading a 1-to-1, you need to have a very, very high success rate. If you're trading a 2-to-1, 3-to-1, you can obviously have more chances of losing because your winners will outweigh that. And rule number 3 is just creating your actual strategy and your entry model. So what is going to tell you, okay, this is all lining up, I'm going to enter this trade? That's your actual strategy and your edge. So let's go over some examples of what I have personally been doing this past week to grow my small account. And then we'll also go over a trade that I took on Friday that everybody in the group absolutely crushed it on, which was oil. Oil is super hard to trade, but I absolutely love it. Covering rule number 1 first, and that was basically the time frame conversation. So this means that you have to come to the screens and decide, okay, based on my schedule, so most of you, almost all of you probably work a full-time job, unless you are a full-time trader watching this, kudos to you, but your full-time job is going to dictate when you can come to the screen. So that's the first thing you need to ask yourself is what times of day am I most available to trade, and it will just fit my schedule best. So for me personally, based on my trading style, I actually love trading in the pre-market session, which is another perk of being able to trade futures. So with options, I had to wait till after market open, and I was trading later in the day. Not a huge fan of that, and I don't like trading market open, which is another thing you should consider if you are new and doing a small account challenge. Market open can oftentimes be way too volatile, and it'll be really hard to have a solid risk versus reward unless you're just really good at scalping, which again, I find is very rare for new people. Okay, before we dive into CL, let's go over to ES. The reason I want to start with ES is because a lot of you are probably familiar with SPY, and ES is just the futures version of SPY. So if you do decide to make that transition over, it's a really easy transition to go from SPY to ES. However, it's also a good one for me to use as an example on why when I'm trading pre-market, I also avoid things like news. So all of this should go into your plan when it comes to, okay, if I'm growing a small account, what are my rules? What timeframes am I trading or am I not trading? I think what timeframes you're not trading can be a more important conversation. For me, my personal rules is I do not trade news. Typically, if we have a big FOMC day or CPI day today, I rarely trade at all. And I know many traders also avoid those days as well. So if you are trading pre-market sessions, pay attention to the 8:30 a.m. news drops. Those can be absolutely killer to your accounts if you're not paying attention, and it can blow right through your stops. This right here would be an example of what I'm talking about. So this was big data due, and you can see the insane volatility, which yes, you can absolutely make money off of if you're a good scalper, but if you're trying to play it safe, it's just really not a good idea. But for me, timeframes I like to trade, it's pre-market session around 8 a.m. Eastern into 9 a.m. Eastern. I avoid that key 8:30 a.m. data due. I don't trade market open, and I'll typically come back after about an hour of price action has developed. So later in the day, around that 10:30 a.m. mark into lunchtime will be my second trading session. If I did not hit my morning profit goal, I'll come back. So just ask yourself that question based on your schedule. What is going to be the best time frame for me to trade? And then set that strict trading window and do not come to the screens any time other than that, unless you find that your trading window after 2 weeks is just not providing solid setups. Maybe you're trying to trade when we don't really have high volume. Then you obviously need to reassess. Okay, so timeframes to trade. Also, when it comes to actual timeframe execution, I'll go over that in a strategy example on which ones that I execute on. But now let's go over position sizing and risk. We'll just use this same volatility example because I oftentimes see this happen. So let's say that you decided to, obviously you're breaking some rules, you're trading during news. Let's say you decided to take a short right in here, right? You make some money, it goes down, you're super excited. You wait for it to come back up. Oftentimes when it comes back to your original entry, you might think, okay, I'm gonna go back in short again because I'm confident that that was a good resistance level. I mean, looking left, you can see we've caught some resistance there before. Now we get here and we start to stall out a little bit, so you went ahead and jumped the gun, but this time you double your size. So for example, let's say you were trading one contract here and now you take 2 contracts. It keeps going against you and you get stopped out and all your previous profits are gone and some. So what I mean when it says position sizing and your risk is not only do you need to have a proper risk, we've talked about that 2 to 1, 3 to 1 ratio, meaning simple math here. If you are risking $10, you want to make 20 or 30. That's just the simple way to put it. But when it comes to position sizing, you do not want to be trading one contract over and over, and then all of a sudden you get confident out of nowhere, and now you're trading 4 or 5 contracts. That will absolutely ruin your account very quickly, especially if you're trying to grow a small account. You have to be very calculated with the amount of risk you're taking, and every trade has to be the same position size, or it's not going to make sense over the long run. To wrap this video up, let's go over what I'm sure most of you want to see, and that is just a trade example of something that I personally took this past week, and I'll give you kind of just quick example of my strategy and entry model, as well as what I was looking for and why I took that trade. All right, we have to head over to oil to look at the trade that I took, and then I'll bring up Discord to give you the exact picture example of what I was looking for. Okay, so this is one of the pictures that I posted in Discord for the morning session on Friday. Typically on Fridays, I do not trade later in the day, so if I miss any type of moves in morning session, I'll just call it a week. Price action on Friday is not that great, but overall, let's kind of go over what I was looking for. You can see my lovely drawing here. I've got my trend lines drawn. I have my key fib levels in place, and then there's also a few other factors that I'm taking into consideration, as well as price action. Understanding how price acts and moves and being able to read that is absolutely 100% key when it comes to trading. So nothing else is going to matter if you do not understand price action, at least in my opinion. So that's something you definitely need to look more into if you feel like you're struggling there. What I was looking for, so we were doing this right at 8:30. Yeah, you can see up here 8:35 a.m. So then we need to go and backtrack when that was. That was right in here. So we were coming into micro range, which is a fib strategy I've created, and I was looking for buyers to be present. We were creating higher lows. Just looking left here, you've got this low into micro range, which happened earlier that morning around 5:20 a.m. I am Eastern time, by the way. So if you're curious, this is Eastern time. Now, we were forming some higher lows. We were upstepping here, which is a good sign, good bullish sign on price action. And then we started to reclaim my fib level. So I was looking long. You can obviously see my next target was 80.90. And then the target after that was 81.37, which I had drawn in a different picture, but you can see my level up here was 81.37. So if we broke this target area 80.90, my next target was 81.37, and then obviously you want to move your stop up with the play once momentum happens, because oftentimes you want to sell into the momentum, not just wait for your exact target to hit. This is a great example of that. So you can see This right here is the move that I took, the move that we all took in Discord, and we didn't exactly hit 81.37. We actually came all the way back down, and it wasn't till later in the day at around 11 a.m. Eastern we finally hit that level. So there were not only one opportunity, but two solid opportunities to play level to level here, which is why it's really key that you develop your strategy. My strategy only works if I'm near one of these key fib levels, if I am seeing trend and price action agree with these levels, and then also you can throw in something like supply and demand. If you're confused on any of these topics, check out the rest of the videos on my channel. I do have many videos explaining more in depth on things like how to chart, time frames I'm using, which by the way, I am on a 5-minute chart. That is what I execute on. Supply and demand and different things like that. So back to this trade here, there were two different entry opportunities. And so for me, I went ahead and entered in on this candle once we reclaimed my 80.63 level. However, via this picture, you can see the second opportunity that I was referring to was we then needed higher support to hold at 80.66, which was another key level. And that was this candle right here, which we bounced off perfectly. We had a low on that candle of 80.66 to the T. And then we ended up rallying pretty dang close to my level, but I ultimately sold the rest of my position into this candle. And this was a great opportunity to make about $800 to $1,000 just off of that small account that I had started to grow. This is not me oversizing my position. I averaged about $1,000 to $1,500 per day, trading my normal 2 to 3 contract max risk level. Now, obviously, everybody's going to be different with what risk management you choose. I usually try to shoot for a 3-to-1. So example on that is we'll just do a visual example. So when I entered off this candle, obviously I needed to have a set risk level. So my set risk level was the candle prior. I had that mental stop, but my hard stop was going to be right underneath this area here. So we had formed obviously higher support and just simple realization that I need that higher support to hold. I don't want to come back and test this support. We have now started to make higher lows and created a higher support area. I want that to hold. But once I saw this momentum candle over my level, ideally this right here was my stop, the low of this candle. So that would have been right in here. And then as we're moving up, I'm moving my stop up so I don't lose any profits, and then I can quickly go to break even once momentum starts to work in my favor. Now, when it comes to target, obviously I said I had 80.90. So 80.90 was right in here, was the first target, target 1, and then target 2 was 81.37. So I'll go ahead and turn this green just for a better visual here. Okay, so that was target 1, and then my entry and my average was right in here. So right near 80.66 to 80.65. This was my entry average off of the contracts that I took. So we can go ahead and draw that out as well, and then we'll just make that pink. Let's do this, and then turn that pink. Okay, and I really like doing this because it just helps traders visually see, okay, this is what a risk versus reward that's solid looks like on a chart. You don't have to get too crazy. I mean, obviously you need to calculate, but I see some people get down to the very penny on a 3-to-1, and they're trying to figure all that out before they take the trade. Just visually look at the chart. Does it make sense visually? Does that look bigger than your risk, right? Are you trying to buy near support and then sell near resistance? Don't overcomplicate it. So let's just remove my fibs for a second so we don't have too many lines playing in. So just to do more of the math side of this, you've got 80.65 entry, average 80.55 risk. So that's 0.10. That's easy math, right? And now if you're shooting for a 3-to-1, you want 30 if you're risking 10. So then just do 80.65 plus 0.30, and that equals 80.95. Remember I said my first take profit was near 80.90, so that's close enough. That's a good one, and that was only take profit 1. So obviously take profit 2 was way up here, and if we're doing the math on that, that was near 81.37 minus 80.65 equals 0.72. So that's way over a 3-to-1. That is a very, very high reward and a very low risk. That's exactly what I shoot for. And so other things that helped me enter this trade other than my fib strategy is you could just be looking left, right? I always tell people don't overcomplicate this, especially in the beginning. Buy near support, sell near resistance. And that might sound super complicated, but sometimes it's just because traders aren't allowing price action to develop enough and they aren't patient for those things to happen. If you can see right here, we had a nice little bump up from this area. this could be considered demand. So go back and look at that supply and demand video that I talked about. But this demand zone is where you want to look to buy. What did we do every single time we've bounced off this demand zone? Up, up, back down, up again, back down, higher support, up again. So something as simple as a supply or demand zone can be a good strategy to add in, especially if you are looking to grow a small account. And it's something I personally use every single day, obviously in combination with other things. I'm a big fan of layering, right? And seeing confluences. So not only is it a demand zone, but it's also a fib or a key level for me. Not only that, but price action is pointing higher lows for me. Not only that, but I'm also seeing the candles react the way that I want to certain levels. So there's always ways to increase your ability to trade better, but overall just start simple and it can go a long way. But that is a wrap for today's lesson on how to grow a small account, how I'm personally growing a small account in 2024. I hope you guys found this helpful. And then like I said, if you want more information, I do have that free futures workshop linked in the description box down below. Make sure to follow me on Instagram if you want more daily content from me. And thank you so much for everyone who made it possible for me to get to 100K subscribers.